My name is Julien. I'm with Delphi Digital on the research side. So primarily cover AI infrastructure. But today, we're diving into DeFi with a few experts here. So yeah, maybe I'll just hand it over to the panelists. Tien, we'll start with you for just quick intros. Kind of your background in DeFi, and then we'll dive into the question list. How does that sound?
Sure. So, hi everyone. I'm Tien, CEO, co-founder of Pendle. We're a yield tokenization protocol.
I'm Louis, founder of Ouroboros Capital. We run a liquid token hedge fund, mostly prop capital, but started raising external capital this year, focusing on DeFi yield.
Hello guys, my name is Julien. I'm founder and CEO of Stake Capital. It's an investment family office. We also do quantitative strategies, and we also have venture studios where we build different type of DeFi projects.
Okay. So yeah, this is the DeFi market structure panel. And so maybe just first question is, over the last 12 months, what have been some of the largest changes in DeFi market structure? And then, kind of your forecast for what the next 12 months might bring. So just kind of the biggest updates in terms of what's happened in DeFi and how things might change going forward.
I can start. So I think one of the key changes that we've witnessed is the evolution of incentives. Obviously, DeFi protocols are not profitable from the get-go, have no revenue, no users. And I think what we've seen in 2021 was a lot of these bootstrapping of activity and users came from rewards, high APRs, tokens, but projects started to realize that's obviously extremely cancerous. Tokens get dumped immediately, mercenary capital comes, and that game sort of evolved into points this year because obviously they want to cast additional layer of, I would say, opaqueness to the rewards that users are receiving, and hence less mercenary capital coming in.
Yeah.
And I think we'll continue to see an evolution of that as projects start to continue to tinker about how can they continue to bootstrap users using incentives, but at the same time optimize for more genuine activity, genuine or captive capital, rather than the mercenary ones.
Okay.
Yeah, I guess from protocol development perspective, I don't think a lot has changed. So compared to maybe 2020, 2021 period, most of the protocols that users utilize are still largely the same. Yeah, I agree with what Ouroboros mentioned, right? Largely around the incentive structure. And I also am of the opinion that because now it's so easy to launch L1s and L2s and everyone's really fighting for a small pool of applications, the only way is to really just utilize incentives to attract development. And it becomes it kind of results in a very short-term kind of implementation, right? As a developer, there are so many options. You just have to go to the chain that offers the best grant, and then you become a serial grant application. Yeah. And you just keep rotating that. And again, I'm not sure how things will change in 12 months because I think just because the barrier of launching an L1 and L2 ecosystem is so low right now, from a technical standpoint, I foresee this behavior will likely sustain.
Yeah. And then I guess a follow-up question is just around moats, right? In the event that some of these incentives are being used poorly, or there's just an endless bunch of new projects. I would say in Web 2, it seems like there are barriers to entry. There's network effects. In Web 3, you have vampire attacks. Things are forkable. There's just a much lower barriers to entry for new projects to come after your market share. So how do you think about, from an investment perspective or a builder/investment perspective, one, building moats, or two, finding protocols that have sustainable fundamentals over time?
Julien? Yeah, I think it's a matter of the team power executions. It's think in a space of DeFi, you have to be even more competitive than in traditional finance. So don't be scared of, like you said, type of vampire attack or finding the right model to get liquidity from other protocols. And I think coming back to the first question, what we've seen in the past, when the market is high, you can incentivize people to deposit inside your protocol, like through liquidity, treasury incentives. But when the market is low, then you have to find new mechanism to attract people to deposit inside your project or to cross and bridge inside your protocol blockchain. And this is where you come up with points. And points it's kind of an interesting mechanism. It's like miles in traditional finance, where you don't really need money, but you need to pretend or make sure that those points will be worth something at some point. And this is how you attract users without spending money. Where in a bull market, you can actually incentivize people to deposit because you have the power executions. So coming back to the second questions, I think how you overpass the liquidity fermentations and people being able to use your product is by having a strong team and strong power executions.
Yeah. It does feel like, given some of these other factors are absent, just like continual execution and betting on the right team is one of the few sustainable modes in DeFi. So
I have something to add, like from a builder perspective, right?
Yeah.
Especially like when it comes to DeFi, a lot of, at least like the parts that are managing money, like the contracts that users interface with, those are open source. But I think there is also another layer of technical mode that teams can consider implementing, right? So for example, front end, back end, they don't necessarily have to be open sourced. I think this is potentially something that can differentiate the user experience. So this is one. And then secondly, I think brand and reputation also matters. Uniswap is, I think, one of the better example in this regard, right? Like there are so many forks of Uniswap, but generally speaking, everywhere Uniswap deploys, across all the different ecosystems, right? They continue to be the dominant AMM. And I think a large part of it is because users have a lot of trust in the Uniswap brand, even without attractive incentives.
Yeah.
The interaction with the protocol is very organic. And I think, yeah, as far as I'm aware, it's really largely because of the trust in the Uniswap brand.
And then in, I guess, Pendle, obviously you guys have found product market fit and have had some of those gains. Like, have you gone about specifically implementing certain practices to build up these modes, or variations in your go-to-market that has led to some of that success?
I think, we try to replicate the Uniswap model, right? We try to establish a brand that users can trust. And then, of course, like at the technical layer, if things can be delegated to the backend, we try to do that. So now Pendle is actually a rather heavy, like backend heavy product. We are consciously trying to create the mode and protect it.
Yeah.
And then, of course, like on top of that, the liquidity is, at least in Pendle's case, is another form of mode. Because for new products that emerge, firstly, the time in market is not long enough. So it's very difficult for these protocols to attract big amount of liquidity. We've been around for a couple of years now.
Yeah.
We've been through a couple of cycles, and then in the most recent maturity event in June, we've processed $3 billion with no hiccups. So I think over time, with more of these events, like we hopefully can construct the trust in the brand.
Yeah, makes sense. Okay, and then I guess around liquidity fragmentation that some of you guys discussed earlier, just thinking about like one of the original promises of DeFi was supposed to be around composability, software, developer, network effects, money Legos, being able to piece things together in kind of a compounding ecosystem. But given the explosion of layer ones and the low barriers to entry, I'd say it has fragmented quite a bit, and there's been a relatively poor user experience, as well as fragmented liquidity. So how do you guys think about this? How does this evolve over the next 12 months? Does Solana take more share? Do base rollups come to fruition? Are there chain abstraction solutions? Does more share go to solvers and intent networks?
Yeah. I believe we'll see a strong concentrations of few protocols. I think we'll see there was a lot of L2 and L1 over the past few years, but because now you will see protocol being able to interact across different blockchains without even the user knowing where the liquidity is being deposited. I believe today it's kind of a alpha, but 1inch is going to release something that is cross chains and also Bitcoin and etc. where you can swap and deposit liquidity without knowing yourself where you're depositing the liquidity. And this will allow projects to only focus on the product, and then you will see a lot of L1 and L2 dying because they will not have the narrative to incentivize people to stay in their protocol, because it will not be a matter of staying on the protocol. It will just be a matter of the use case and the APY or the yield. And this will, as a product, for example, Pendle will have the ability to use any type of blockchains and just focus on a product level without having to strike deals with or partnership with blockchain.
Does that mean that the underlying L1 gets more commoditized and the apps capture more value?
Yeah, I think we're moving into what we see in traditional finance. For example, HTTP is being the main protocol for going on the web, SMTP for messages. So I think you will have, and potentially you also have, and this is what we've seen before, is like L1, where all competing with Ethereum and saying, oh, we are the best, cheapest transactions and fastest one. And now they all turning into L2 and providing functionality to Ethereum. So you will see potentially Ethereum, Solana, or other strong blockchains, but very few will remain and survive, I believe.
Yeah. Louis, you have anything there? Or?
No, I largely agree. I think that the experience of a user has massively been stagnant, but we have indeed seen several middle layers being built to improve that experience. And exactly like what Julien said, these days you can swap one asset from one chain to a different asset on another chain. We're starting to see these middle layers being built. We're starting to see protocols that are aggregating yield in one asset across different chains. So I think these will sort of help improve the user experience for sure.
Yeah, makes sense. All right, don't want to get too political here, but the US is obviously heading into an election. I would say crypto has kind of been a whipping boy in certain jurisdictions over the last 4 years, but heading into the election, we've seen a little bit of a shift in tune as people have kind of found that this is a sizable constituency for populist politics. So curious to get the panel's thoughts on what a Trump victory could mean or a Kamala victory could mean for institutional adoption, just given how important the US market is in terms of regulatory leadership. And does that open the doors for institutional adoption?
So I think none of us are obviously predominantly in the US, but speaking to a lot of US builders, it seems like there's a lot of uncertainty around the regulatory landscape, and they're just waiting for the administration to give that clarity. Builders advised by their legal counsel get different inputs week in, week out about where they can be, where they can't be, where they can be domiciled, where they can't be offering
Certainly an administration that paves the way for clarity would, I think, open up a lot of innovation in the US. I think also a lot of builders that were initially more apprehensive would then become bolder to innovate as well. So for sure, I think if you have an administration that's friendly towards DeFi innovation, then certainly that would benefit the landscape.
Yeah, for sure. I think if Trump seems to be the most has the most appetite for crypto. I'm not sure if personally if it's, for him a way to get more votes, but it's a good signal for regulatory institutions wise. And it's interesting because US is one of the most strict towards DeFi projects, and most of the DeFi projects out there, they block US from being used, but it's also where products are being the most used. So I'm confused how this is possible. So if US get friendly in crypto because they believe it's a strong quote weapon in the world as dominations, I think it will probably get back on a bull market, but it depends. And it was also a good vehicle for example, market, prediction markets, all different things. So in a structured product market, derivative market, of course, this will be a very, very strong signal.
Yeah, I agree. Okay, next one. I guess I'd say the past 2 years have been an explosion on the AI side, and it seems like every month there's a new model drop. Every day there's a new paper drop. You read the Leopold Aschenbrenner paper. It makes a credible case for AGI by 2030, right? And whether that's the case or not, there are 100,000 H100 clusters being built. It seems like you will have very capable agents on chain or intermediating users' interactions. And so I am curious how that impacts the DeFi landscape, who might benefit, who's potentially disintermediated. How does the intersection play out in y'all's opinion?
I think the market of data and being able to sell or aggregate and build models, like large model that we're seeing in OpenAI or Anthropic and those type of open source model to tap into the economy of data, which is one of the biggest market worldwide. For DeFi and blockchain in general, it's a tremendous amount of, it's a huge market. We're probably potentially one of the biggest one, but it's also a lot of noise. So I'm talking in terms of investment. For us, it's really risky because I would say 99.9% are all type of
vaporware.
Yeah, vaporware. It's even bigger than just AI because you get crypto plus AI. So by order of magnitude, it's huge amount of vaporware projects, but 1% or less than 1% will capture trillions of US dollar market cap. So it's a matter of understanding, having the right team that can tackle this market or build interesting product, because now, today, everyone can have access to strong model APIs type of things. So it's a matter of finding the right team that will position a product and be able to attract users. But it's all about the team, I would say.
Yeah.
So, go ahead.
Oh yeah, I have a point to add on AI. I think one of the stronger propositions of AI, at least in the case of DeFi, is the enhancement of security. I think far too many times, the attacks have become quite sophisticated now. And I think a lot of the attacks, at least from experience and looking at the last 12 months, yes, they've become more sophisticated, but at the same time, with artificial intelligence, there are probably ways to minimize and mitigate the risk exposure, right? Like far too many times, I think an exploiter, someone with malicious attempt would just replicate a website and then that looks exactly the same and then try to phish the vulnerable individuals. I think, yeah, if there are AI agents that are very dedicated to taking down some of these malicious sites, I think we can cut down quite a lot of the unnecessary exploits.
Not so sure, actually. I think it will be even faster for people to commit crimes, but all the magnitude way bigger than being able to protect yourself. Because the amount of people that are willing to, or they are incentivized to attack others is actually bigger than the one that are willing to defend those people being attacked. So by nature, you will see more attacks than defense.
Well, I think this is probably a case of incentive alignment, right?
Yeah, but
Yeah.
because today the amount of hacks that we are having without AI are big, and Vec News is one of the websites that lists all those hacks, and I think this will continue and get even bigger and faster amount of hacks. But yeah, the only way that you can protect yourself is by having personal agents that check, but still, I think the power of those hacks will increase, and the amount will increase.
Yeah, I think the cybersecurity, cat and mouse game just continues, right? Like, one branch, like, the attackers speed ahead, the defenders catch up. Like, it really is like quite cyclical.
Actually, if I can add to that, I think what's also very interesting, the first question that you asked was the evolution of the DeFi landscape, and we're talking about points. I think if we have AI agents optimizing DeFi yields back in 2021, then obviously they're going to crush the game because it's very one-dimensional, it's very 2D. But these days, I think as incentives evolve into points, a lot of what we've realized about extracting returns from DeFi comes from the more fundamental, less empirical work of assessing which teams are going to successfully pull off a listing, for example, which teams are going to be well looked upon by investors. And I think these are like the softer things that requires you to talk to exchanges, VCs, listing teams, the teams themselves. These are things that obviously the AI agents can't do, and it's obviously not information that's publicly available. So I think as the intersection of these two things come together, it'll be quite interesting to watch how this obviously pans out.
Yeah, it's obviously evolving very quickly. So I think we'll see a lot of changes over the next 2 years. All right, I mean, there's been a lot of talk on the panel today about points. I think we went from airdrops to 2024 kind of being the year of points. It seems like there's starting to be a decent amount of pushback. What do you guys think comes next? How do you think about go-to-market, as a protocol founder? Or what would you look for in a project in order to have a successful go-to-market strategy in a Web3 environment?
There's definitely a change in appetite for points now. Points, maybe in the first half of the year, there was a lot of uncertainty, right? Because EigenLayer, in a way, popularized the notion of points, and then have all the LRTs building on top of Babylon, issuing their points as well. And because of the uncertainty, there was a lot of inefficiency in the price discovery of the points. And when we, as Pendle, launched some of these markets, there was a hefty demand for points. And as a result of the demand, a lot of users were actually paying a premium for acquiring the points, which also resulted in a very interesting dynamics where the other side of the users could acquire fixed yield, very attractive fixed yield, maybe around the range of 40 to 60%. This was around the March-April period. But as time passes, there's a lot more data points because EtherFi, Renzo, Ethena, and a couple of other projects have gradually materialized the points into actual airdrop tokens. And then people have actually like a lot more data points that they can work with. So I think right now, because of the historical data over the last couple of months, the premium for points has come down quite drastically. And I am of the opinion that the way people perceive points today would be how they perceive the project. Like in the past 6 months, right? Maybe in the January of this year, you can be a really shitty project and you launch a points program. There could be a healthy interest for the points. But today, if you're a shitty project and no one pays attention to you, the points are not going to make a lot of difference. But if you're a good project, it can have a couple of benefits as well, right? Like it is a very, very efficient way of attracting initial liquidity. And this is very different from like just testnet points, right? Because testnet is all fake.
Yeah.
You can actually bot up the numbers and I mean, no stake. There's no stake there. But in the case of points, it's actually real money involved, and everyone's trying to participate in a certain campaign in anticipation of a healthy reward. So I think points are a very proven way to help projects bootstrap initial traction, and then it's also a very good way for price discovery, like at least a reference point for the upcoming TGE. So I think it will continue to be a very essential fixture in a go-to-market strategy for any kind of upcoming protocols. But the appetite for it will gradually gravitate towards the general sentiment towards the project.
I think it's interesting as well. I mean, you mentioned that points are starting to become almost like a form of prediction markets for TGE listing valuation, and we've seen that. But I've also seen that the participants have gotten it massively wrong as well, many times. So I think it's quite interesting to watch if this market becomes more and more efficient at predicting the TGE listing valuations. But obviously we do a lot of points, in DeFi YoFund, and we hope that it lasts. So we obviously hope that it continues to be a mainstay. Yeah.
Got it. All right, last question. We got 2 minutes left here, so I'm gonna maybe a little bit spicy, but what is the DeFi protocol, major DeFi protocol that you think is the most overrated? Potentially you're short. And then a follow-on question is, what would you like to see built over the next 12 months? What are the core missing primitives that you think the ecosystem needs to really propel itself forward? Or just in general, what are you excited about in pursuing as an investor or as a builder?
So I'll start with, I won't name a protocol that I want to short, but I'll start with what I'm excited about. So we're very excited actually about prediction markets and betting related products. I think that there are a lot of innovation in DeFi that can be transferred there, especially when it comes to leverage. I think a lot of betting markets today are what we call, they are almost like fixed expiry products, if I would use the equivalent in finance,
yeah.
And hence leverage can't be used. But we're looking for basically teams that can not only build such a product, and I've already seen such products where you can access leverage in betting and prediction markets, but not only that, but understand why these problems have never been solved in Web 2, and most of the time there's a reason why, and acknowledge that. I think the problem with a lot of, I think DeFi had a lot of teams that were from finance building DeFi products, so they understand it perfectly, but the betting world tends to be a bit more obscure to some of the builders, and they think that these are problems that exist that needs to be solved and their solution fits it, but often they don't have the context to which why it hasn't been solved yet. So I think that's what I'm quite excited to see over the next 1 to 2 years. Yeah.
I think I'm not looking for products that or DeFi protocols that will solve some existing problem in Web 2. What I'm looking for is a new type of ideas that were never built before, using FHE, zero knowledge proof type of things. I think we'll see new products that we never seen before, like or stuff that we'll be able to build that we don't actually understand today, because those type of new technology, and this is coming, I believe.
Yeah, 100%. You good?
Yeah. Just a quick one. I am hopeful of BTC-Fi.
Yeah.
I think it's the single largest asset within the entire crypto segment. And even if a small percentage of that gets converted to DeFi activities, I think it is still a very large addressable market.
Yeah. Okay, awesome. Well, thank you guys.